Cathy, what does the price declines potentially look like if, in fact, we do see the Fed hike again?
I think it's not pretty, actually. And I think that, especially we've seen some asset classes, specifically multifamily, industrial, really kind of insulated from some of the cap rate increases and some of the stress when it comes to interest rates. But when you look at some of the out of favor asset classes, such as office, retail, these are the most heavily impacted. And I think so many borrowers, especially office owners, are really struggling with their properties just now when it comes to loans that are maturing in need of refinances. An increase in interest rates is going to be especially bad for those owners.
So, Cathy, is the worst still ahead then for office?
I fear it is. I do fear it is. From everything I'm hearing from my sources, and obviously we're very heavily dependent on our sources, what they're telling us, but things are not going to get better until interest rates stabilize, till there's some price discovery, and I think until a lot of the distress actually makes its way through the system when it comes to commercial real estate. A lot of my sources are expecting an uptick in distress in the fourth quarter, and that'll come from kind of forced property sales and also loan portfolio sales. And we're starting to see some of them slowly unravel now, but what I'm hearing is there's going to be a lot more of that in the fourth quarter. So plenty more distress to come, unfortunately.
So there is, obviously, we've talked about this too, the potential for more distress to come. And we've talked about the worries with regard to the office sector and even the potential for these banks to have to offload some of these loans on their books. But what about the bright spots? One thing that we are hearing is about, say, some strength in retail. What are you hearing there?
We definitely are seeing a lot of strength in retail, and it's been a really refreshing change, I have to say. During the pandemic, the past few years, multifamily and industrial have really been the two darlings of the asset classes. But the last, I would say probably 6 months or so, we've seen a lot of investors, a lot of lenders gravitate slowly back to retail. And I think there's coming from a few different reasons. I think they want diversification in their portfolios. I think there's a slight return to brick and mortar retail and experiential retail also. So whereas retail was once the redheaded stepchild of asset classes, I think that's no longer the case. I think it's firmly office now that is the out of favor asset class, and retail is making something of a comeback, which can only be good for commercial real estate.
Cathy, when it comes to city versus suburbs, we talk about it a lot when it comes to office space. How does that comparison work when it comes to retail now that more people are working from home? Are you seeing higher demand for some of those retail locations in the suburbs than we were pre-pandemic?
I think we definitely are. And I think, again, the emphasis is really on the experiential side of things. I think if you can bring shoppers into a mall or into a shopping location where there's something else to do apart from just shop, I think that's definitely something that works in your favor. I think that there's no doubt that we have seen some of the big cities, especially the downtowns, the retail locations there have been heavily impacted. But like I said, I think there has been slight recovery there. I think, though, in general, when it comes to the cities, the downtowns continue to be a big concern overall. In terms of, if you look at the office product there, the lack of people in their offices, or if they're there a few days a week, they're not there consistently. And I think that gradually is creating more and more stress on cities' downtowns in general.